Hi there, Stan, the Annuity Man, America's annuity agent licensed in all 50 states and Puerto Rico, the pioneer of contractual guarantees only. Today's topic is annuities versus stock market investments. Let's compare those two. Boy, I can't wait for this one. This is like, you throwing me the softball and it's just laying up there and then I just crush it. I'm getting ready to crush this one. And it's not going to be anything that you've heard from any other agent and advisor when it comes to annuities and stock market investments. And that's a good thing because you need to hear it after this. All right, so let's get down and dirty here. Annuities versus stock market investment. First thing, annuities are not investments, okay? Done. Hit the gavel, I rest my case. Annuities are not investments. They're contracts. They're transfer of risk strategies. Period. End of story. There's no hybrid annuities that creep over into the stock market side. No. I know that the seminar is telling you that's true. Stupid people you see on I'm not going to say on YouTube because I'm on YouTube and I'm not stupid. I reek of IQ. You know what I'm saying? But I do know what I'm talking about because I do have a background in the other side of the ledger, the stock market side. I used to be with Dean Witter. Remember them? Payne Weber. Remember them? Morgan Stanley, UBS, Union Bank of Switzerland. Did that, done that, understand that. Okay? Got it. Worked there before the buildings fell, as they say. Okay? So I understand that. So when people say, well, how do you compare annuities to the stock market? I don't, because they shouldn't be compared, because annuities should be non-correlated, meaning not having anything to do with the markets. Now I know you're saying, well, a guy locally showed me this product in market upside with no downside and upfront bonus. Okay, that's what I'm talking about. There's some stupidity out there with the sales pitches and the nonsense that gets you caught up into thinking you can have your cake and eat it too. Annuities solve for four things: principal protection, income for life, legacy, and long-term care. That's it. There's no S for stock market. There's no M for market. There's no G for growth. There's no B for Bitcoin. There's no H for hybrid. Okay? Those are the four things they solve for. Period. End of story. You're transferring the risk to the life insurance company that issues the annuity to solve for one or more of those things. If you do not need to solve for one or more of those things in the pill, principal protection, income for life, legacy, long-term care, you do not need an annuity. If you're looking for growth or reasonable rate of return, stay in the markets. Okay? Now, life insurance companies are going to try to peel money away from you on this thing that, it'll do this and it'll do this and principal protection, market growth, and all that. Listen, if that was true and that happened consistently with those types of products, that's all that Goldman Sachs would buy, right? Why wouldn't they? In a volatile market where we're all waiting for the black swan event, why wouldn't you buy that? I don't know, because it doesn't work. Indexed annuities were put on the planet in 1995 to compete with CD returns. To compete with CD returns, not market products. They were initially called equity indexed annuities, and it was used so inappropriately by the people selling the product that the industry changed the name to fixed index annuity because there were such shenanigans going on and such over-promising. Stock market is for growth. Stock market is for opportunity. Stock market is for the 10-baggers, as they say in the business. You buy it for 10, it goes to 100. Great. There's not a life insurance product that issues annuity. Life insurance that issues annuity. There's not that annuity product that can give you that potential. Period. End of story. You cannot compare the two. This side's contracts, annuities. This side's investments, unlimited upside. Unlimited downside, unlimited upside. Transfer of risk, shoulder the risk. You're transferring the risk with annuities, you're shouldering the risk with the stock market side, with the market side. That doesn't make either better than the other. They're just, you can't compare them. It's apples and oranges. Now in the middle here is the sales pitch, right here. So here's the truth, Here's the truth. Here's the sales pitches that want you to believe you can have both. That Venn diagram that was so beat up in the last presidential election. Love a Venn diagram. Love me a Venn diagram. Venn diagram here doesn't work. Okay. There's no hybrid. Hybrid's a mattress. Okay. Hybrid can be a plant, and hybrid can be a car. But one thing hybrid cannot be is an annuity. Even though it's easy to stand up there as Johnny Appleseed agent at the expensive steak dinner seminar and go, this annuity's a hybrid. It does a little bit of both. No, it doesn't, Johnny. Okay? Sounds good. It sounds too good to be true because it is. With annuities, because they're contracts, you go to my site at theannuityman.com, you run contractual guarantees. The numbers that you will see are contractually guaranteed. There is no hypothetical. That's it. Well, I love the guy called me the other day. He goes, well, I ran the quotes. Is there any potential for it to increase? No. Well, this guy told me that his is increased. Okay. I mean, if you believe that, anytime an agent says that something's going to increase, all the annuity company does is severely lower the initial payment to make up for it. They don't give that away. The best inflation annuity on the planet is Social Security because it's political, not actuarial, and I'm not political, I'm contractual. I need to run on the contractual guarantees only platform. Stan the Annuity Man, 2028, contractual guarantees only. Means everything we do is contractually guaranteed. I know what you're saying. That'd be a perfect world, Stan. And they wouldn't want me there. That'd be a tough interview. I mean, if the media got a hold of me, whoo, I would rake them over the coals. It would not be a fun one, I tell you. There would be no love lost, and I would fillet them like a flounder. So in conclusion, annuities are contracts and their transfer of risk. They should be used as non-correlated assets. What are they non-correlated to? The markets. It's that simple, okay? And if you approach annuities from a contractual guarantee standpoint, the will do, you own an annuity for the will do, what it will do, not what it might do. And the might do is the stock market side. Have at it. Go for it. Get real returns there. But don't believe the sales pitches that tell you you can have it both. Do me a favor. Above my head, countdown clock to a video I did on contractual guarantees only. Since I'm the pioneer of that, started that, now everyone's following me, which is fine, great. I love that. It tells why contractual guarantees is what built Stan the Annuity Man, why it's important to us and why it should be important to you, and the only thing you look at when considering annuities, okay? My name is Stan the Annuity Man. See you next time.